FedEx expecting to see its busiest day in company history, shifting parcels all across the world. FedEx shares are doing very nicely. They're up almost a full percentage point today. The stock, by the way, up about 15% this year. NBC's Jay Gray joins us live from the FedEx Grounds hub in Hutchins, Texas. Hello, Jay.
Good morning, Larry, or good afternoon. Look, it sounds kind of quiet right now for being the busiest day for FedEx. Looks kind of empty. That's because we're in between waves at this hub. What we saw this morning was all the outgoing packages loaded into trucks in this area here, this dock. They've moved out. Now we're waiting for the rest of the packages to come in that will be distributed across the nation and across the world. But understand they are moving a massive amount of packages today. Let's take a look at what it looks like as they move through the system, sorting almost 30,000 an hour in this hub alone. 16 million packages throughout the day today, more than 220 million through the holiday season. Both of those significant records for this company. And look, that increase in business has really helped to push the stock as well. It's surged over the last month. FedEx up almost 9%. And when you look at UPS, they're up about 7% as well. And of course, Trish, as you know, FedEx to release their second quarter numbers on Thursday. Right now, though, they're focused on all those packages. Again, 16 million in one day, almost double what they traditionally do. It's going to be a very long and very busy day at hubs like this one.
Well, maybe you'll be able to help them out down there, Jay, given it's going to be so busy. All right, thanks so much. So, Rich, we're asking, is the better investment here between FedEx and UPS? Both stocks, they're up so far year to date. FedEx almost 14%. Ooh. UPS around 27%. Joining us right now with some ideas, Kevin Sterling, transportation analyst at BB&T, and on the phone, Donald Broughton, analyst at Avondale Partners. Great to see both of you guys. You know, Kevin, I'll begin with you. What's your pick and why?
Well, I actually think they're both attractive investments. You know, every day they both move more than 10% of U.S. GDP, which is pretty phenomenal. Also, I was looking at some air freight data that recently came out, and they both have tremendous international and domestic exposure. For instance, Frankfurt, Europe's largest air cargo hub, saw a record month of November. For the month of November, and we saw the same type of trend in Hong Kong. So they both have tremendous international exposure and also domestic exposure. Look at some of your domestic trucking trends in the month of November and early December. On a per-day basis, we're average with what we saw in October, and that's very rare. So I think they're both attractive investments.
Donald Broughton, let me just ask you, is it fair to characterize FedEx as the big air game and UPS as the ground game? I mean, normally one would say air game beats ground game. Is that fair? Is that true?
It was true, Larry, but it's not true anymore. FedEx right now has been stealing market share on the ground domestically from UPS, has been doing so for 10-plus years. I can go back to the UPS public offering in '99 and say, well, FedEx was less than 1/8 the size of UPS on the ground. Now they're almost 1/2 the size of UPS. So what you're saying used to be true, but it's not anymore. And respectfully, I disagree. I think FedEx is a much better investment. 27% of their revenue comes from international. Only 17% of UPS's does. So you got a much better broad reach globally to take advantage of global commerce as it reignites.
I want to explore this a little bit more. I mean, you've got a buy on FedEx, Donald, however, a hold on UPS. So you're really positive on FedEx, but it looks like the rest of the street doesn't necessarily agree with you as wholeheartedly, given the upside we've seen in UPS in the last year versus FedEx.
Well, quite frankly, I'm not really concerned about whether the rest of the street agrees with me or not, as long as we end up being right about the stocks. But the truth is that FedEx had a meteoric run in 2009, took a little bit of a breather in 2010, and UPS shares have caught up, but still not caught up completely. I'd point out, for instance, that UPS shares trade for, $73 a share. FedEx is almost $95. Both of these stocks were $50 a share in the beginning of 2009.
Kevin, Donald has given you a drubbing, both air and ground. He's completely attacked your point of view. Do you want to respond to that? Do you want to defend your point of view?
Absolutely. You know, if you look at UPS, they offer a very nice dividend. I think they're going to increase that next year. And also share buybacks. I think they're going to get aggressive with the share buybacks. Also, UPS has the higher return characteristics. And lastly, UPS has the higher margins than FedEx despite being unionized. So I think what UPS is doing on a cost basis to really drive those margins is very impressive.
Donald, is that in fact true? Do you agree that UPS has higher profit margins? I thought UPS was more unionized and FedEx less unionized.
Oh, you're absolutely right. It is unionized, and FedEx is not, except for the pilots. And he's right in that UPS has higher margins. But let's go back and look at what's been going on. UPS is the margin between the two continues to narrow, continues to converge. So while UPS used to boast operating margins that were a full 1,000 basis points better than FedEx, that gap is now narrowed to only about 400 basis points. And we see a number of dynamic factors accounting for why that will continue to close. As the margins close, valuation disparities should close as well, and that means FedEx shares will outperform.
Donald, Kevin, thank you so much. Appreciate it. You know, we might buy FedEx just based on that less union argument there.
Yeah, I mean, that's an interesting point. Fred Smith has fought very hard to keep the unions out of their day-to-day operations.